So first, I would like to start with Asfaw. Asfaw is a veteran banker, and he has seen Dashen grow tremendously, not only from a banking perspective, but introducing different technologies by themselves and through collaborations. So the first question goes to you, Asfaw, and saying, do you see and how do you see banks, MNO-led fintechs, and non-MNO fintechs transforming customer bank relationships, again within the Ethiopian context, and what is the implication? Does this shift have, for conventional banks, is it a challenge, an opportunity? Could you see it from your point of view within the Ethiopian context?
Thank you,
Financial sector.
Welcome to this.
When you look
I wanted to really thank the iCapital team because I had the chance, to have conversation with Dr. Damtew some years back when they really started the first series. So it's very good, to see that the 7th series is running very well with a number of, participants. That requires, perseverance, dedication, focus. So I think they should really be congratulated for that because, Ethiopia needs more of these kinds of, knowledge really spaces. So I'm very, very much thankful, not only for inviting us, but, for the energy that they have, demonstrated so far. I think directly to come to the question, before I come to the question, I think there are important points that really you have made, Munir, in your, context stating really statements. He talked about, access to finance because he gave us some figures comparing it to the growing number of, branches in the country. He was also talking about low level of, inclusion and so on forth. So I will come to that reality when I, describe some of the points that you have raised.
Recording in progress.
I think Bruk has really made a very good, really presentation. I also believe that, these actors in the ecosystem, which are the banks, the MNOs, and the fintechs, by their own, virtue and nature, they have, they will contribute to this transformation process of customer bank relationship. So, let me try to see, from the practical point of view, what, they are doing. Yeah. Shall I continue? All right. I think we are observing in the context of Ethiopia that, banks, even though traditionally we are running conventional businesses, now the trend is changing towards, digital transformation. So there are, practical examples that we are really observing in the market. We are seeing that banks are developing their mobile banking, applications. They are trying to introduce, branchless, bankings, and also they are also investing on their internet banking as well. So there is that, transformation path in the market. They are also focusing on the financial inclusion really perspective as well, because as we are really discoursing, we are also realizing that there is a concentration risk really in the sector. So rather than now focusing on the conventional really branch expansion, banks are also engaged in agent banking, and also they are also engaging themselves in trying to reach their customers through different, digital channels. In terms of product and innovation as well, there is really tremendous really change. Apart from the conventional products and services, we are seeing a number of, technology-based products are coming into the market, mainly in collaboration with, fintechs. The MNOs, they have their own, peculiarities as well. They are trying to use their agent network really to reach out to the masses. And also they are establishing, as Bruk has shown us, different partnerships with the banks. And also they are engaged in giving mobile money services like, bill payments and others. Fintechs, as we know, they are coming. This is a new phenomenon that we are observing in our sector. They are highly, really engaged in innovative, solutions, which we really appreciate. This is also vivid in our market as well. So digital payments solutions related to remittances, saving mobilization, and so on forth are really coming in, and there are innovative products that really try to reach, the agricultural sector, which is really was not the high focus of the conventional banking. We are also observing in our market that fintechs are trying to come up with, marketplace platforms where lenders and, buyers connect, digitally. And interestingly, some fintechs are also coming up with idea of promoting financial literacy in the market, because they are developing interesting tools to enhance this financial literacy among the public. So I believe all these actors are really playing their part to change the status quo, particularly in terms of the relationship between customers, and banks. From practical point of view, it doesn't mean that there is no challenge. Bruk has been mentioning about collaboration, which I really allude to. But the challenge, one of the challenges that we are really observing and also we are passing through is the first is the alignment of between the strategies of the banks to that of the fintechs and MNOs. And also there is a priority conflict that really we are really observing. So that's an area where discourse should really continue between banks and MNOs and fintech. So that's one of the challenges that really I have been observing. The other one is getting the right partner from both sides, not only from the bank side, but from the fintech side as well. Banks, we do require dependable fintechs, and at the same time, fintechs require, or MNOs require, banks that can really understand, navigate the future, and really work together. So I really observe some challenge in that space as well. The third challenge, practical challenge, is about the culture. Because when you embark upon partnership and collaboration, culture has become really a challenge, because these different actors, they operate in different modalities. If you take some of us, if you take the banking sector, we are highly procedure-oriented type of entity. But if you take the fintechs, either they are sole proprietorship or PLC, and they make decision right away. They want to really act fast. So that culture really would really bring a huge challenge when we think of this partnership and collaboration, which is really very important. So I think the discourse should really take that challenge into consideration. Yes, this changing space also is bringing challenge to the banks, because now banks are required to earmark a good sum of investment to collaborate and also to invest on technology, because we used to focus only on our investment on CBS, yes, core banking system, but now the landscape is changing, so it requires more investment in that space. So I see that really challenge really would really come. The other challenge is about the regulatory framework. Yes, in the context of Ethiopia, before we take any product or before we market products, we have to really defend that to the central bank, and I see that the process that it takes to really take products to the market. Yes, I have seen improvements, but it's a really very challenging place. I'm very happy when Tom was discussing about this regulatory sandbox concept, and I am sure Solomon will be touching upon that. I'm very happy about that, because that would create a closed environment, maybe a controlled environment, where things will get tested and where the interaction between the regulators and the fintech and the banks would really be enhanced to really speed up going for market. So that will give me a positive aspect. But on the other side as well, I think not only the products, but also the regulation itself should be up to speed. So that there is a challenge there. For instance, now when we talk about digital banking, we are talking about one product, for instance, mobile micro lending. So are we, or can we really regulate this space, for instance, with the asset classification directives that we have for the conventional banking? So that's really a challenge. So the regulatory framework speed also would really be a challenge in this really space. And the other one, I mean, I have been saying this in different spaces about, the evenness or the uneven competition landscape, that we have. I mean, all actions. I mean, as a country, I'm very happy that we have digital strategy. I mean, this is a recent phenomenon, which really I commend really very much. And following that, the central bank also has developed a financial digital strategy, which is really a very good, really guiding document really for us. But are we aligned? Is there alignment in this, ecosystem? Because the narrative that really we are sending to the ecosystem should really be very well, guided, so that even competition landscape is really very, very much important. Otherwise, the investment that banks would put into this space, will be compromised, and it will really challenge the confidence really of the banks as well. Having said this, I mean, just to put some remarks on the opportunity side, I think Bruk has mentioned it. For me as well, if we conduct a survey among these actors, I think we will arrive at, some commonalities. One, all of them, they will talk about enhancing access to financial services. I mean, all these actors, they will talk about, enhancing competition, promoting digital adoption, inclusion, and so on forth. So this really tells me that rather than really a trait, as Bruk said. I think we have commonality where we should really partner and really collaborate. But the question is, how ready really are we in terms of our mindset to really leverage this opportunity? Banks as an opportunity again, as a strategic competition, we want to really make our operation efficient. So this is a space where we can really do so. We are planning to optimize our branches. We want to rationalize our branch operations, but we cannot do it without having a complementary strategy on this space as well. Yesterday I had a very good conversation with you, Munir, over coffee. I believe as an opportunity working with fintechs like you guys would really help us to really leverage perhaps the data that has been accumulated in different spaces. You have been telling me about your experience and that you have passed through in accumulating data. So that data analytics would really help us to change the customer experience at the end of the day. And lastly, I think we have to really explore how we can enhance our investment on the interoperability that we have put as a bank, because that space really should yet to be explored. So these are the opportunities. But to conclude, I think Bruk has made a very good conclusion by saying that this collaboration can be successful, he said, and also it depends on how banks embrace and adopt to change. But I will add another condition to it as well, saying that the success also depends on how fintechs present themselves in terms of innovative ideas and convincing banks with meaningful use cases. Thank you.
I think it was a very insightful impartment of thinking. I would really like to thank Asfaw, as usual, for his openness. My take from it is really, everybody, both from whether it's banks, MNOs, or fintechs, strategy would be a prerequisite for collaboration and partnership. Whether it is from the bank side, thinking about priorities, culture, or from fintech or MNO side, preparing the right value proposition. It is really about fixing and thinking about the strategy. The second take I have from Asfaw's presentation or discussion is really the regulatory framework needs to both encourage but at the same time regulate the space. And I think that's also, we have a panelist here and we'll have a chance to hear from him on what regulatory frameworks are evolving within the Ethiopian landscape. Within the regulatory landscape, I think Sandbox is coming up again and again, and I think Tom is back online. Tom, if you can hear me, can you give us your last 3 or 4 minutes of your presentation, which was disrupted for one reason or another? It will be a good segue for us to hear from you on the Sandbox, specifically within the Ethiopian context. Thank you.
Yeah, thank you very much. And yeah, no problem. Great to be back with you. So I was just talking before I got cut off, talking about some of the benefits of the Sandbox. So reducing time and cost to market for the firms that are supported, providing greater competition, hopefully introducing more innovative products and services, and potentially incumbents either responding to those by launching their own products, or as we panelists very clearly talked about, in terms of encouraging those partnerships. And maybe we can talk a little bit more about how the Sandbox can do that in the session. And as I said before, allowing the regulators themselves to observe and learn about new technologies, and hopefully then, thinking about, are the existing regulations appropriate? Do they need to change to reduce any unintended consequences or unintended barriers to entry? So very quickly then, I'll just in terms of how sandboxes generally work. So generally, you would have an application window where you'd try and get as many good quality applications from firms that are interested in supporting the sandbox as possible. You would have certain eligibility criteria. So how do you decide which applications to support? These could be things around is the firm ready to test in the sandbox? Are they proposing a genuine innovation? Generally, they are most helpful when they're very high level and allow regulators to make judgments about which firms to take in or not. So those firms that are accepted, there's a process where the regulator will work very closely with the firm to design a sandbox test, looking at all the risks and how the firm can mitigate those risks. Once the regulator and the firm are comfortable with that testing plan, then the firm can progress into testing, into live testing. Again, quite case-by-case basis. Typically, these tests last a few months. I've had tests supported that lasted one day. I've had tests that lasted 2-3 years. So it does depend. But around 6 months, I think, is ideal. End of those tests, then the regulator will support the firm to exit the sandbox and hopefully successfully launch at scale in the market. So removing any restriction on that business and allowing that firm to operate at scale. I won't dwell on risks. I think I've talked about most of these, but there are important ways the regulatory authorities can manage and mitigate the risks that a new business model or a new innovation can pose. But I'll just finish maybe on what we're doing in Ethiopia, which is very exciting. So me and my team are working very closely with the Capital Market Authority and the National Bank, the two key financial regulators in Ethiopia, to design a regulatory sandbox in Ethiopia, very closely supported by the UNDP and the Innovative Finance Lab. This project is a year-long project. So as well as designing a sandbox that hopefully reflects the unique opportunities and challenges in the Ethiopian market, we will then work with the regulatory authorities to actually implement that sandbox, open it up for applications, support firms, and take firms through this end-to-end journey from application testing to exiting over the course of about the next year. So it's very, very exciting. We started this project in February. Spent a lot of time looking at the legal and regulatory context and also talking to firms. Hopefully some of the firms in this room have heard from me or my team, and we definitely want to reach out a lot more and talk about your experiences in getting products and services to market, some of the challenges you've faced, and some of the opportunities that may be available to make that process smoother. I'll just end to say, I'm very, very conscious that, I've designed sandboxes around the world. What we're not trying to do here is, think, well, the UK has a successful sandbox, therefore we'll just adopt that approach for Ethiopia. We're very, very conscious that we need to co-create this sandbox with the regulatory authorities and with people in this room to really design something that works for the Ethiopian context. And so I'm really, really looking forward to continuing to do that over the next few months. And I'm conscious of time, so I will finish there. And thank you for giving me this opportunity. It's been an honor to talk to you.
Thank you, Tom. Knowing that you are in a UK time zone and it's a very early day for you, we'll let you go with one question. I think everybody in this room is excited to hear that a sandbox is being established, or a regulatory sandbox is being established between the two entities. But within today's subject, does sandbox have a role to either enable or encourage collaboration and partnerships between the banks, the MNO-led fintechs, and the non-MNO fintechs? And what's your experience on that?
Sorry. Yeah, absolutely. I mean, I think this collaboration and partnership aspect is really, I mean, it's really crucial generally in terms of encouraging innovation. But in terms of my experience of the sandbox, um, yeah, the sandbox can absolutely encourage this collaboration and partnership. So I'll give you some practical examples, and I won't name the firms because I probably shouldn't, but I'll give you some examples of what I've seen in other markets. So for the bank themselves, so I've supported a lot of banks in sandbox tests. The bank doesn't need, a license. It already has the license, the permissions they need, but the bank is looking to develop something, a new product or a new service that's potentially innovative, and they need a bit of sort of regulatory guidance. There may be some sort of regulatory ambiguity on that, and the bank have identified a technology provider that they'd like to partner with. Now, what banks told us is their processes are often quite bureaucratic and can take a long time to get the necessary internal approvals to get those agreements with the third party in place. Quite understandably. Well, the bank told us is being in the sandbox allowed them to expedite those approval processes and make those internal processes go a lot faster. So the confidence, I guess, that the sandbox provided, banks told us was very helpful in terms of getting the necessary buy-in and approvals through their internal structures. Or conversely, for the fintech, we would have a lot of smaller firms coming into the sandbox who were not looking to do banking business, or they maybe were developing, a very common one was developing a micro savings app or something like that. Again, like a technology innovation. And they came into the sandbox saying, in order for us to test this, we need to develop a partnership with a large financial institution, a banker, insurer, whoever. And we would think it would be legitimate for us to support that firm if being in the sandbox allowed those partnership arrangements to work and to be unlocked. And our experience was, not in all cases, but in a lot of cases, the fact that that firm could tell the bank, tell the insurer that they're in the sandbox, they're being closely supervised by the regulator. Again, that gave the large firm confidence and in that fintech, in order to allow them to have the confidence and the assurance that fintech was something that was legitimate and was looking to do the right thing and good things and working very closely with the regulator. So I've had lots of practical examples where this partnership approach, the sandbox, can absolutely expedite this approach. What I think one of the limitations of the sandbox is that regulators don't really sort of matchmake or directly intervene in terms of making those partnership arrangements. Again, I think that's quite difficult for a regulator to do. But what it can do is it can act as a convener as well. So organizing events, round tables, bringing large firms and fintechs together to allow them to talk and discuss and share ideas and potentially partnership arrangements can grow. So I think there's lots of potential there. I hope that's helpful.
Thank you very much, Tom. I think you have touched upon what Asfaw was asking in terms of partnerships and how to identify partnerships that have capabilities and capacities. So the sandbox can be one such environment to allow the collaboration, taste, and understand each other. I would ask the organizers some timekeeping rules so that we don't overrun too much on the time. Somebody needs to help me think about the time as we go along. Dr. Gamachu, if you can assign somebody for timekeeping, just to make sure that we are in time check. I would like to proceed to Teferi Mekonen, the CEO of Oromia Bank, and move the discussion a little bit away from just partnership, but how partnership can play a role or collaboration. And you see there's a lot of discussions these days around concentration. Asfaw raised it in his discussion. Financial inclusion and concentration are now becoming interchangeable within the Ethiopian context, and it is becoming a topic of subject, especially when the central bank has published their first report showing the level of concentration. Do you see this challenge being addressed through collaboration and partnership? And what are your thoughts by using this as a use case in fostering collaboration opportunities or threats?
Thank you very much, Mr. Munir. Good morning, everyone. I'm really honored to be part of this panel, which is very important for not only for the sector, but also for the nation and beyond. Before that, I would like to congratulate the organizers to make it for the 7th time the hardest way, even during challenging times. So, congratulations once again, iCapital and the organizers. This session is really very important for not only for Ethiopia, but also for East Africa and beyond, because it is a platform in which we align our thoughts about the financial sector, which is the bloodstream of our economy and our growth as well. So I encourage to just keep up the momentum by increasing the scope of the engagement of our African brothers. What I see now is Kenyans are actively participating, and part of it, we have to move to include our other African brothers as well. Having said that, let me say about the journey of Ethiopian commercial banks during the last couple of 15 years by comparing with the previous 100 years. You know, about 15 years before, we have only about 600 something mortar and brick branches, which is highly transformed during the last 15 years by increasing the number of role players, commercial bankers, and increasing the number of branch outreach to about 12,000 by now, which is by far exponential growth from the previous 100 years of Ethiopian banking history. Presently, you know, we are welcoming fintechs, which are sweeteners of the banking sector, pacing up the accessibility, the efficiency, the timeliness of banking services by improving the service excellence of customers in alignment with the current landscape of the rest of the world. At least, as mentioned by Mr. Bruk in his presentation, fintechs are, though their engagement is in a limited service areas, on payment and settlement areas, it is improving a lot and engaging bankers to just align themselves either by just digitalizing their services or by partnering with the fintechs and payment operators. So the issue is, as just stipulated by Mr. Bruk, the areas in which we collaborate and partner are almost the lion's share, take the lion's share instead of, considering the digital payment platform as a threat for the conventional bankers. You know, the strategic mission should be on how we can optimize and break the big bread. Surely we have 120 million plus market, even as Ethiopia. As just highlighted by Mr. Munir, we are not addressing even not more than 40% of this big bread. So what we have to focus on strategically by partnering is how we can share this big market and go beyond at international level. So, you know, as long as the financial inclusion and financial accession is concerned, first of all, we have to bring about the mindset change among our society on how we can financially literate them, okay? Even forget alone the digital financial literacy, our society is yet to just align themselves with the conventional banking. So far, the mortar and brick branch network accession has brought a lot of transformation in our society's banking accession and financial inclusion. Now, by making use of the spices brought with the digitalization of the time, we have to just literate our society so that they will financial digital literacy friendly. What we have to understand is it is not the thought we are just pouring to the society. We have to well understand how the society is just adjusting themselves towards the digital financial literacy. At times, our society is active enough in using social media participation and actively participating on that. But polarly, our society is not trustfully engaging in using digital financial services. On the other hand, there is some sort of fear about the security of these digital financial services. I practically know big businessmen who don't make use of digital services because of the worry they have about the security. So a big assignment is ahead of us in just engaging our society to make use of digital services. We are just investing on a lot, not only by partnering with fintech companies and the like. The other concern we have to consider is, as mentioned by Mr. Asfaw, these fintech companies are more of sole proprietorship type of businesses. We have to institutionalize them just like banks, okay? We have to, a collaboration among fintech owners shall also be expected, you know, a partnership among them is also one of the areas that we have to touch. Going back to the question specifically raised to me by Mr. Munir, of course, the recent financial stability report has just clearly stated that we have a very little financial inclusion, and even the equitability of the resource with respect to financing is very insignificant. However, it may vary from bank to bank based on the type of the bank. If I take my bank as an example, my deposit concentration is about 10 million per depositor, while the financing accession is about 5 million per borrower. So my strategic focus is more or less to just consider the missing middle, which we call small and medium enterprises. But the aggregate picture as a nation is not pleasant, as we just observed. You know, many factors have just resulted in that huge concentration, which follows equivalent risk of default and portfolio concentration. So we have to change this as much as possible by bringing about appropriate financial inclusion, end-to-end financial inclusion, especially the financing aspect. As an opportunity, the partnership we are considering with fintechs and investing on digital financing will hopefully improve this unbalanced concentration. As a bank, of course, we are partnering with some fintechs like Moneta. We are running an omni-channel platform by partnering with Moneta and one other solution provider, which is an international company. We are just embarked on about 8 channels providing omni-channel product on top of digital financing service. So all these efforts are demonstrations of cooperation and partnership between banks and fintechs. We have to promote further. So in order to just optimize from what we are just recommending and suggesting, first of all, we have to bring about a mindset change among the key stakeholders, including banks, fintechs, the society at large, and the regulator. Surely we have to make a transition of status quo, a very defensive status quo, to an attacking or transition, okay? You know, the journey we have been in so far is more of a pessimistic, a very defensive, a very risk-averted type of move by especially banks and even the regulator. Now, we have to align ourselves with the current scope of the very changing landscape of the world, and we have to be flexible while staying prudent and sound. As long as the community is concerned, the community has to align itself to the digital world by making use of the services that we are just providing in partnership with digital fintech providers or by our own service. On the other hand, we the banks are also supposed to be a very flexible, a very risk-taking, especially in just accommodating the startups and providing some financial end-to-end financial services so that they will just catalyze the economic activities of the nation. The third stakeholder that should reassess itself is the regulator in the speed of the authorization of new products and services. Unlike the previous times, they have to be swift and they have to have some appetite as well, okay? So that we will go fast with in alignment with the rest of the world. So our mindset should be unlocked and pace up with the fast-moving world. Finally, what I wanted to just remark is our presenter, Mr. Bruk, has well shaped our discussion. You know, it should be both ways. As far as the banks are moving halfway to embrace fintechs, the fintechs shall also embrace both each other, and they have to be fair enough when we come to sharing the big bread among ourselves. So we have to bring about a win-win mindset to just optimize the very untapped potential that, as I mentioned, the very untapped potential we have across the nation, which is more than 120 million and above market. Thank you very much.
Thank you, Ato Teferi. I think you have stated two things that are my takeaways. One is the pie is very big, so everybody can share it. Two is we need to have a mindset that is different to collaborate. The organizers have showed me a yellow card by saying we only have 30 minutes more, so the tough role of the moderator is now trying to decide what to do with this 30 minutes. What I would like to concentrate is really give Yilebes 3 minutes to talk about the role fintechs, instant payments play from an ecosystem collaboration perspective. And I would really now start timekeeping, 3 minutes.
All right. It's really difficult to talk about instant payments, collaboration, interoperability in 3 minutes. iCapital, thank you for organizing this event for the 7th time. And thank you for inviting me in this panel discussion. And welcome those of you who come from abroad. Welcome to the land of origin. And thank you for attending the event. So maybe I can focus on on one area specifically on the instant payment, and I will touch some points on the collaboration. Let me start. Why do we use cash? Why do we need cash? And sometimes I hear a phrase like cash is our enemy. Do you think so? Yeah, you can. Either show me your heads, nodding your heads, agree, or cash is our good friend or enemy. I think most of you agree it's our good friend. If you go outside and take Macchiato and you want to pay later, but there is no any option, the only saver for you is a cash in your pocket. So the cash enemy, it's a good friend. But we cannot kill cash by having a motto, we have to create the cashless society. We have to have a cash-light society, or by saying the cash is our enemy. But we have to know what makes cash a king. There are 3 inherent characteristics of cash that is king by itself. One is its instant settlement. You don't need time for settlement of cash. The second one is universal interoperability. In Ethiopia, wherever you go, BRR is acceptable. And most of the countries in the world, wherever you go, USD is acceptable. It's universally interoperable. And it is available 24/7. Nobody will say you system Yilebes, so it's acceptable. So why? It's a good friend, so we have to use it. But it has its own drawbacks that we have to work on. Cash is not remote friendly, and cash is anonymous. And there are some minor issues that we can also mention about cash. But as the individual, not as CEO of the national switch, if you give me a better solution that can replace cash, I can accept. I don't have orthodox marriage with cash. But there must be a solution that can help me, that can give me all benefits of cash along with additional features. That's why we need instant payment. It is instant settlement. It is universal interoperability. We can take the national interoperability, regional, continental, and universal interoperability. When I say interoperability, I'm not referring to point-to-point connections and bilateral agreements. I'm referring to multilateral agreements and a multilateral interoperability. And it has to be available 24/7. Then there are the drawbacks of cash that we can talk about, like the remote friendly. I can do any transaction remotely, and it is traceable as well. So for any transaction, when it's IPS, it's traceable and available. And we can add also additional features actually. So that's why recently IPS is becoming popular in the world, and 1/3 of the countries in the world are trying to have the IPS. You know what surprised me when I prepared myself for this panel discussion? I tried to understand the history of real-time payment. I understood that real-time payment was started in 1973 in Japan, before 51 years. But still, only 1/3 of the world is trying to cover it. And even the dominant and known countries like US, the Fed now was launched before a year, and South Africa pay sharp before a year. When it comes to Ethiopia as well, what we have to do, we have to really collaborate and work on instant payment. It requires the collaboration of all the ecosystem. It is not only the role of the banks. There must be readiness from the government and mainly from the use case providers. Unless all use case providers are ready to provide their services digitally, nobody will access it. If I allow to oppose one of the ideas my good friend and boss Teferi mentioned, and the society is, or a society has to be ready to use the digital financial services. And the society is not that much trustfully using the digital financial services. Okay, as an individual, what is the reason that makes me not to use trustfully the digital financial services? There are different reasons. Is it available? Is it instant? Is it revocable? If I pay, then immediately the payer will be comfortable that it will not be reversed. And providing, can I have access for all use cases? Those are the reasons. So the use case providers have to be ready. Unless the use case providers are ready, the consumers cannot do. The consumer requires only a few matter of awareness. They can even easily start using it without further awareness and training. And the same for merchants as well. Yeah, let me just one point.
My sincere apologies. I think I need to blame Dr. Gamachu for putting such a stellar panelist that I need to cut.
All right, so because I have to, I have to respect the moderator. So let me pause here. All right.
I'm sure that a lot of people are eager to, please, sorry. I'm receiving a lot of texts for questions, so I think it's better that we allow questions to happen than the monologue. Bruk, I think you'll allow me to skip you and have one last question to the regulator. And it's very difficult to give a time to the regulator because tomorrow we might be applying licenses there. Solomon, I think that the National Bank has been coming up with interesting focus areas, and out of the 3 new strategic focus areas, one is introduction of innovative ways to improve access, and it really talks about depth of financial services, the deepening, and you are moving away from access to deepening of financial services. What does that mean? What does it look like for the banking sector, the fintech sector, and the MNO sector within that context? And I'm sure you'd like to respond to everybody has been saying, from Asfaw to Teferi to Tom, the role regulators should play in encouraging, while at the same time regulating the ecosystem. So I'd like you to start with, what do you mean by deepening of financial services as opposed to access within the collaboration and partnerships?
I just think
Thank you, Munir. So how many
towards
minutes?
the digital financial literacy.
As I said, I'm afraid of timing you.
So what I see is that you are kind of not treating guys equally. So you gave 30 minutes to Atosfao, and I'm just for joking. Thank you, Munir, for asking the question, and thank you the organizers for inviting me for this very important event. So you raised a very good question. So let me start with the status of how our financial inclusion or access looks like. I want to actually, the financial inclusion concept is, of course, you know, it is a very broad, but I want to focus on the account ownership because it's one of the parameters that we usually use to measure the financial inclusion. So very surprisingly in Ethiopia, now as we speak, we have more than 255 accounts open in the financial institutions. Imagine we are 120 million, and you can also think beyond that, like how many of children are there who are not able to reach on the age of having an account, and of which 98 million are mobile wallet accounts. And again, we have more than 47 million debit cards. I'm still speaking about Ethiopia, where we are talking about financial inclusion. The deposit accounts, or what you call it, the regular accounts are beyond like 255 million. The digital account, what we call, including card, mobile banking, and others are passing 120 million. So now the focus, of course, is not about having of an account, but are these accounts are used for basic financial services? Are these accounts are equally distributed among societies? For example, to gender, right? So when you come to this, the gender distribution in the account ownership is only 17.4%, which means that is from the total account owned by the women are only for 17.5%. So for what purpose these accounts are being used? So the main purpose of accounts that are, the purpose of using this account is for making payments. And one surprising number, so, okay, we have like 98 million of mobile wallet accounts in the market, and 47 something million of cards. When we see the active rate of these accounts, from the mobile money, we are not passing 25% per quarter. The threshold is if an account is being activated or doing some transaction or something like that, that's 25%. So when you say that is beyond accounts, and the deepening is we have to use or scale these accounts for further, financial services like credit and saving. And the other surprising thing is, so the Ethiopian banks are now serving the majority of the financial, the users, of course. But do you know that the number of business accounts, so how many businesses we have in Ethiopia? I don't have the number, but you can imagine, right? If the Minister of Trade representative here, he can tell us the number of, business companies in Ethiopia. But how many of them have registered and are using that business accounts? So it is very, very minimal. So the individual accounts takes the lion's share. So the transaction being made with the individual. So the deepening or the inclusion also, we have to think, so are our business also included to the financial, onto the financial services? Are they able to access the loan, the credit, the MSMEs or SMEs, whatever we call it? And I also want to ask the bankers here is, who is the bank who is providing, yes, online loan application and online loan approval? Do we have the channels? So we are talking about the partnership with fintechs or like that. So are we ready for that? And are we really, open to take some risks and to entertain the majority of the users who are in need of the financial services? So when we say about the deepening, so two things. So data and the demand driven. So the data driven is something that's, data is a new collateral. So meaning that is, now we have to shift the thinking of looking the fixed asset or looking some other, physical assets. So the power is the data. So data is the new collateral. So we have to facilitate and accelerate the services, especially the credit, access to credit based on the data. Now let me also tell you one surprising thing that I found in just past 1 month or 2 months. I was asking data from the banks of 1 year data. You know the size of the data? We stopped collecting the data due to not having of the resource in the offices. It's a huge data that every bank has. But that data is only sleep and is not being used for further services, you see? And it tells how deepen the problem is in our sector. So that the demand driven, so the services that being provided to be focused on the demand of the society. It could be on a business or it could be on individuals or whatever it is. And it should be also on data-driven concept. One thing I need to, as a regulator, I need to mention, of course, don't stop me. So, yeah. So, the access of finance and for example, the focus area. Now, within 9 months, for example, there is near to 6 billion birr has been provided as a credit digitally. You know, 95% of this amount is being provided for consumption. I just access credit from my bank through Telecom or whatever it is, and I used it for fuel payments. I used it for, mobile airtime payments, something like that. So the impact even needs to be also seen. For who we are lending? Is that, contributing to the growth of the economy and the sustainability as well? So that is really the other issue that when we talk about the deepening of financial services. Thank you, Atomrid, and that is for joke, not...
Ato Asfaw has been talking about a level playing field, and it shows that the regulator is above that playing field. I think thank you very much for great panelists. And the idea from the beginning, from the discussions we have been having with Dr. Damtew, is really to allow the audience to ask the questions. I'm very conscious of the time between us and everybody and coffee. And if you can allow 15 minutes of patience to enable certain questions to be asked to the panelists, and the idea is that this interchange would help the conversation continue. What I understand from Ato Solomon and what I take away is that Ethiopia needs to move from access of accounts to the use of accounts, and that use resources, data-driven financial services, and it should be protected with financial services. So I'd like to offer strategic partnerships and collaborations. So this one really focuses playing field. Atomalaku is pressing for the banking side. Let's take 3 questions and open it up to another. Gender is of the subject, so we would like to have women to participate too.
The other concern we have to consider is, as mentioned by Mr. Asfaw, these intake companies are more of sole proprietorship type of businesses. So we have institutionalized them just like banks, okay? We have a collaboration among the fintech owners and also be expected, a partnership among them is also one of the areas that we have to touch. Going back to the question specifically raised to me by Mr. Munir.
Thank you. Thank you. Let me try to distribute the questions. The first question, I think, was about collateral management. So if you're doing securities lending and borrowing, maybe Mariam, if you want to address it. How does it work exactly?
Okay. The way I understood the question, he was asking about managing the securities that have been provided as collateral when someone takes a loan from bank, right? So this is what happens.
Inevitable to collaborate between telcos, fintechs, and banks. But the issue is how we can make it that way. I can raise some of the cases where we can entertain what we are calling collaborations. Telcos has a network, having quite a large number of subscribers, and banks have customers where they establish trusts. In relation to telcos, do you have a kind of, let's say, open API, or you expose your interface to banks instead of selecting this bank or so for wallet transfer or for credit or whatever, where any bank can come in and plug in what I call it an open API, where they can use your platform, and you have quite a large number of data, and for me data is a kind of fuel where we can use it. For our KYC purposes and so on, is there a way to have an open API from your side where we can do retrieval? Of course, we have to maintain also the act of privacy of individuals, but system-to-system communication, there is a way where we can use that KYC. The second point is for Solomon and Bruk also on the quality of data, and quite a number of statistics are going on. And I think the 6 months data, at least transactions through Telever is more than 4 trillion or 5 trillion amounts, something like that. But do we have a kind of data analysis over there where how much of them is passing through consumers, the wallet on the consumer side, and instead of those transactions going for loading purposes, especially from branch to wallet and so on. That is very important. For Solomon, you mentioned online credit, 2 minutes. Online credit and online account, technically it's simple to do, but you have to know that based on the rule of the central bank, it requires a wet signature for customers to open up an account. So how we can make and expose to customers to open an account online? Technically, every bank can do it, from what I have seen. ASFwitch and Teferi, as you see, telcos are our competitors, and some of them are charging when customers are moving fund from their wallet account to the branch account, because the branch account is interest-bearing account and the wallet is non-interest-bearing. But for that, telco has started charging, which I believe is unfair. But what I'm saying is, do you think for banks to think having a license on telcos like Equity Bank did in Kenya? Thank you.
Thank you, Tom. The next questions, please, can we keep one question to one individual so that answers can be sought?
All right, good morning, everyone. I'm Hermela. I'm going to try and keep my questions very, very short. I know you said just one, but I'm going to try and make it as brief as possible. So my question is, considering access to finance, my main concern is borrowing or loans. When we talk about business accessibility and why most businesses are not having accounts or they're not performing their transactions through banking, I think it has to do with incentivizing them. And so for businesses, how are we incentivizing them to use our banking platforms? And for Ethio Telecom, considering infrastructure and accessibility, right now who we're talking about is the people that we've accessed. How about the 78% that's largely agrarian, that doesn't even have the infrastructure for telecommunications or internet? And now we're talking about fintech and how people need we just need to raise awareness, but is that the reality? Do they even have access to it? Because I feel like awareness is something that comes after, actually having access to it. And so when we're talking about access to finance, with the agricultural sector taking about, 40% of our GDP, effectively removing the agrarian community from accessing finance and loans and borrowing, obviously has a huge impact on our economy. So I feel like it is a vicious circle where the economy, facilitates the finance sector, but then the finance sector also has to help the economy. So my question, I guess, is to no one in particular, how does fintech, institutions and banking institutions collaborate to kind of find a solution for this? And I completely understand it's not just the financial sector's job, but within the financial sector, what are the innovations that can come about? And how can these two institutions collaborate to kind of close this gap and address the wide range of, like, the vast majority of our population that is being effectively, you know, segregated from these uses. And one last thing.
We agreed on 2 questions.
One last thing. Because we have a lot of instability in Ethiopia, how do we make access to finance resilient to instability, right? That's it. Thank you so very much.
Can I jump you and be democratic enough to go to that side of...
Okay, thank you. Before I'm raising my question, most of the things mentioned, except I think, lack some empirical data. You know, Mr. Asfaw mentioned the need of data analytics. I think that is very important because if you use the data, so
could we have the question, please, so that the time in front of me is saying 6 minutes, so I need to give the chance.
Okay, I make it very short. Okay, because things will be very clear. I think instead of giving a mere opinion, doesn't mean everything is a mere opinion. Anyway, my mere question is: these fintechs, at some point, they become competent with the banks, but you know, these days, for example, the Ethio Telecom, you know, experienced more, made a transaction more than a trillion birr. This number is mentioned in Ethiopia, I think, besides the debt for the first time. This is a huge number. This maybe indicates, it becomes a highly competent to the bankers. So how much competent will it be? Or is there a room for you and such things to work together, or becoming a very, you know, competent? Because one thing very clear is the Telecom or M-Pesa, they are also network providers. They have another advantage. Also, the risk appetite and the regulatory landscape gives them a better opportunity than the banks, I think. So, how much will you going to be, you know, compete with such fintechs, I think?
Thank you very
Thank
much.
you very much.
The question is very clear. There is a 5-minute mark in front of us. I think we will start with Bruk. 1.5 minutes, Bruk, and then Ato Salamon 1.5 minutes, and this time you cannot push us further, and Ato Teferi 1.5 minutes, Yilebes, and let's keep it to 1.5 minutes to answer the questions. Thank you.
Thank you very much once again. I believe we are running out of time. So I'll jump into the questions. I'll try to be very specific. Very important question has been raised by Mr. Malaku regarding collaboration, open API, how data can be shared, and also very important one specific to customer privacy, and of course the charging related concerns. So yes, we have the open API, we have the developer portal, we have announced it in a couple of weeks before, where banks and any partners can directly integrate with Teleber and have leverage the use cases that they want to join. But the very important point is, of course, as an MNO, we do have big size of data that has been built, if you take Ethio Telecom, for the past 130 years. So we do have a very important use case called a link bank. Earlier, I was sharing best experience of the industry where some of the operators
and the banks are partnering so that they leverage the strengths of each, what they have. So when I say bank link, for instance, United Bank can integrate with Telebir, with a link bank, where you can have an access of maybe 74 million telecom subscribers. That means within a single API, Telebir customers can have the capability with a seamless customer journey. Using the application, they can access their conventional bank account using Telebir. On the other side, we'll be pushing a number of traffic to United Bank because customers are supposed to give their consent. That's how EcoBank are doing with the rest of the operators. So I'll be knocking your door maybe tomorrow so that we can start from that. When it comes to wallet to bank related price, we have almost zero charging when we talk about Telebir. Now we have started charging it being very affordable. And at the same time, the wallet to bank and the bank to wallet interoperability, what value are we adding for the conventional banks? Conventional banks, if you are advocating digitalization, you will definitely be focusing on avoiding customer queue visiting your branch. To do so, you want to be investing on your mobile banking, or even if you have wallet, so that customers will start enjoying cash transfer using your mobile banking. So by having an interoperability with a fintech, a MNO-led fintech like us, Telebir, customers of that bank, they will find another reason to use that mobile banking because they have another use case. By using United Banks as an example, they will do a cash-in to their Telebir and enjoy the rest of the fintech's innovative product and services. So that's directly contributing to the bank. On the other side, since we launched Telebir, let me give you one figure. And everything that we talk about, I say there is zero threat, and I am 100% very sure, and it's all about collaboration. Let me give you one figure. Since we launched Telebir, let's consider only the merchant payment. It is very obvious that we need all to work on the merchant transaction and the customer active rate. We have more than 215 billion birr processed by merchants, which was directly pushed to the conventional bank. And we all agree that the conventional bank, at least before the capital market is introduced, of course, after the capital market, we no longer be incentivizing customers to mobilize deposit. Otherwise, we'll be encouraging them to do a real-time investment. But now, deposit mobilization is very key. So just divide 215 billion birr by 3 years, you will find 71 billion in annual. Just divide that by 27 banks, and you will find near to 2 or 3 billion. And what does it mean? It's huge cash. So the collaboration, the integration, the last question that was raised, the figures are being backed with the interoperability through the open API integrations that we have. So this, I think we need to do a financial analysis. If we are considering, if Telebir is doing some, let me give you one example and I will end on that part. We are in the end of this budget year, and we recently introduced a product called Shamo. We wanted to test the feedback from our customers, and we want to redesign our strategy, and we want to have 40 million active customers per month, at least. So we just introduced Shamo, and we have used an aggressive communication, and guess what? Per second, near to 10,000 or more transactions or transaction per second was coming to our Telebir Super App. And we have done our test 100% successfully. And we have taken a lesson on how the upcoming budget year, on how our investment in the infrastructure, in the marketing, that needs to be done so that we will 100% comply to what Mr. Solomon was saying, that the active rate will grow. Currently, we have on daily basis near to 5 billion customer transaction only. Digital in, it could be bulk payment, remittance, or cash in from bank. Digital out, it could be cash out to the bank, and the circulating the merchant payment and the P2P. On average, monthly near to 100 billion. So by doing a different use cases, by introducing different use cases, and by positively contributing to the conventional bank's strategy, we will definitely reach into something very big. And the capital market is going to create another tremendous job. So finally, the fintech business or the financial sector is not simply a joyride. There has to be a collaboration. We need to come up with a very important use cases touching the agriculture, touching every inclusion and the like, so that we'll have a success story. So I would really appreciate that we need to find where we can partner. And the partnership needs to be evaluated figuratively, quantitatively, and we can transparently talk about it. Otherwise, if you see Teleber being saying everything here and there, and the backside, I tell you, everything is taken care of by the conventional banks. So it's our all mutual success story. Thank you.
Ato Solomon, we have 6 minutes and you need to share it with everybody.
Thank you. So I just want to focus on one question, the last question, that these fintechs are becoming a big banks or a big competitor. So here, I think the role of the regulator is very important. So in case of Ethiopia, for example, it is very clear that that's what Telever has to do or what mobile money service providers has to do and the banks has to do. So the money that the Telever or the mobile money operators are playing is staying in the bank. It is deposited in the bank. We're following every day about the balance of that. So it brings in our understanding, it is bringing additional opportunity to the banks. However, there should be a clear scope demarcation. What the mobile money service providers do and what they are not doing. For example, as per our current regulation, the mobile money service providers do not provide credit by themselves. They have to partner with the banks. The source of the fund has to come from the banks. The money that they collect has to stay or deposited in the banks. And even to create equal playing field, we are not allowing a single mobile money operator to put the money that it's collecting is in a single bank beyond 15% of its capital. So it is that the role of the central bank or the regulator is a very, very important, because we have to be very careful not to skew all of the financial sector to the fintech. So there is an inherent business that the banks do, and there is inherent business that the mobile money operators or fintechs can do. But here, collaboration is very important. Interoperability is very important. And the other issue also, now I also suggest you to look into the numbers. So for me, so 1 trillion or 6 trillion are being processed. Where is this money? What is their economic value is very, very important. So for me, for example, if I just push 10,000 birr from my regular account to mobile money account, it is being counted, but the economic value is zero, nothing. I'm not using that for payment or for other things. So we have to look to the numbers and not to exaggerate it, and again, not to, fear something big things are being coming. No, we are still starting, but the role of the central bank is very, very important. And for this, I think central bank, the National Bank of Ethiopia, clearly understands the market, and it has a clear objective how the market has to go. So that this is the issue that I want to raise. Thank you.
አቶ ተፈሪ አንድ ደቂቃ እባክህ።
አንድ ደቂቃ።
አንድ ደቂቃ።
እሺ 30 ሰከንድ አደርገዋለሁ። Thank you very much for the questions. I think Mr. Malaku's it is not a question, rather a concern, okay? It is about fairness. Of course, Mr. Bruk has reacted on it, but what we have been talking is about fairly sharing this huge bread, okay? When we charge, it shouldn't be a bearing so that the customer will not move that money to banks, okay? We have to consider the value proposition as well when we are loading any charge. That is what I wanted to say. I think Mr. Bruk will take this as a homework. The other thing is about how can we bring about the financial inclusion gap through this collaboration. First thing, we have to heartfully collaborate with fintechs. Then after, you know, our beneficiaries of this collaboration should also be loyal to what they are committed. In Ethiopia, what is a challenge is once someone is financed without any collateral or any commitment, they will just challenge the financiers. This mindset should be changed. In my bank, what I do is I just support graduates that are through entrepreneurial coaching, okay? The very attitudinally, characteristic-wise, credit-worthy entrepreneurs. So this attitude should be a character among all the beneficiaries of this financial inclusion. Finally, you know, network providers shall also give equally pacey gateway to non-network financial service or fintech providers. I think Ethio Telecom shall take this also as a home take because it is a complaint among some banks. Ethio Telecom gives some speedy gateway to their own financial services and another some relatively lower pace to other banks. That is a complaint I have been hearing from some banks. So let's take that. Let's compete in a fair playing field of play. Thank you.
Yilebes,
Right.
truly 30 seconds. Please.
All right.
Dr.
Okay.
Gammachu,
I will take only one point, that is access to finance and the need of incentives. Actually, that's one point. It may work. But practically, we found that it's not also working. For instance, if I give you an example of point of sales, banks provide point of sales for free. They provide incentives, and they cover operational costs. But that didn't take up that much. But I heard one of the PSOs, the RFP, they're not giving the post for free. They sell the post. There are the missed areas where the really use cases where there is a need, where there is no reach by banks. So we have to look at where is the real pain point that we can address. For me, it's mainly the collaboration. Everyone has to work. From the government and the media, for instance, the media, IPS, they properly promote? Or I was watching the last year PayShap in Fade Now. It was a huge news. But in our case, it's not. Is it because they don't understand? Is it because they didn't give due attention? What is the problem? So we need also to work with development partners on the awareness. And from the government perspective, you take India, why they are good in financial inclusion? Because the government is really focusing and working and promoting instant payment, UPI, and the RuPay. We have to do that I wish. So everyone has to collaborate. Otherwise, we cannot we give one solution, and that cannot bring a financial inclusion.
Sorry to pressure you.
Yeah.
Asfaw,
I think I like the question by dear lady about the accessibility. I think we should leave this room with a food for thought, honestly. Do we have the real understanding of the concept of access to finance, honestly? Because that's very, very important. We have been opening branches, 25%. We have been increasing it in the past 3 or 4 years with the concept of, enhancing inclusion. Did it really bring result? So there has to be a deliberate action because, the business models of banks should really change. Otherwise, the branch opening will only give you or will create that interface between the customer and the bank. Maybe it might give, develop some trust for the customers. But if we are to really address concentration, if we are to really address financial really inclusion, really there has to be a deliberate action by all the actors with the clarity of understanding on the concept of account, this access to really finance. Solomon has raised an important point about consumption. Yes, they are using that fund for consumption. But first of all, is it not the purpose? Because, that's the purpose that they want the money for. But as you said, with enhanced financial literacy, then we can change that consumption behavior to productive. Thank you.
As a decorum of, I think, panel rules, 2 questions has been asked on Ethio Telecom, Telebr by Teferi as a assignment, and Bruk wants to respond, but maximum 30 seconds.
I'll be quick as much as possible. I think what Mr. Teferi has raised, and maybe in another session I have heard, my advice, it is better not to talk about assumptions. When it comes, as a telecom service provider, banks are very critical enterprise customers for us. Why on earth that we will be doing a service degradation on their USSD, internet, or SMS service just to have an advantage on the similar products that we have? Banks have option to join another operator in the current market that we are. So we're not going to play such game and saying that we are managing big infrastructure, and if a given bank is facing an internet connectivity issue, USSD issue, there are facts technically that can be verified. And I really appreciate whenever we pose such questions, it is better to support it with figures. I have a USSD channel, my success rate is 60%, this is my dashboard, Ethio Telecom, you need to solve it, or I will take my action. Simple. Everything is managed transparently. So for me, I will not take an assignment for an assumption, with due respect, but whoever, any financial institutions working with us, I can assure you that we are serving them with a maximum effort, assuring the highest level of quality of service, but I cannot say that we are 100% efficient, because we are relying on a technology developed by human beings. Thank you very much.
I think with that we come to an end. Dr. Gammachu, once more, thank you very much for iCapital to organize such a very interesting lineup of panelists and very interesting subject. At Asfaw, I asked you, your next summit should only focus on understanding access to financial services. And with that, I would like the audience to thank the panelists.
Thank you.